There we go. Sorry, I had to unmute myself. How's everybody doing? Everybody good? Everybody have a good, crazy week? SPY, the Qs, all kinds of good stuff. Let's go ahead and jump into it. You guys remember that we talked about this the other day. What was it, on Tuesday? That we have quite a bit of buying volume there. And if we closed below to kind of get in some defensive positions, so I do have some puts, just a little bit, nothing crazy just yet. Yeah, so this, let's go to our, let's get rid of that. Let's go here. There we go. So here we go. Let me move some of these lines around. So on Tuesday, that's what we talked about, is some of this buying volume. It is a little bit concerning that we have increasing volume and it's selling. So kind of a little bit of a heads up just to get into a little bit of a defensive position. So for those of you who are familiar with buying puts or hedging with options, just getting a little bit just to be safe. I'm not going 100% full bearish, of course, that would be silly. You will see that this movement here the past 3 or 4 days, not quite, but it's similar to this, just kind of hanging out right here at this green line, which is our 50 exponential moving average. If we were to take a look at the Qs, it looks a little bit different, right? Kind of a little bit different. We didn't close down there below that level, but we did touch it just for a sprinkling, right? We did touch that level and kind of pull back a little bit. So just a smidge of selling volume coming in across the board. Nothing to be super worried about. If you look at the Russell, same thing. Look at the diamonds, same thing, right? On the Dow, the ETF for the Dow Jones, you'll see that just 2 days ago, literally all-time highs, right? Now here's a question for you guys: how many stocks make up the Dow Jones? How many of the stocks? Ooh, 30. It's not 2,600, John. Nope. I believe it's 35. Let's go take a look. So let's let's go to our screener and let's look at the Dow Jones. Here is the answer. 30. Oh, it is 30. S&P is not 500, believe it or not. It's actually 505. Look at that. 505. It's like a 2x4. It's not actually a 2x4. So yeah, that's kind of what we have set up right now, where we are in the markets. Obviously, this happened recently, just back beginning of the year. Kind of broke below, kind of held, went higher. So my personal thought is that we might pull back just a little bit more. We might consolidate, maybe make one lower level and one push lower and then continue higher. So most of you know that ever since COVID, so back here, I mean, the markets have just been rocking and rolling, and it's been quite the run, right? Some of you guys have seen 40, 50, 60, hundreds of percent, 200, 300, 400, 500% returns in your portfolio, being a real life trader. And it's been quite the journey. And so a little too far, too fast, a little bit of cooling the jets action. And that's where we are right now on the overall indexes. Robert says a couple companies have more than one ticker. You're talking about like Google, the A and B. Is that what you're talking about, Robert? I think that's what you're talking about. Oh, okay. Yeah. For SPY. Okay. So Under Armour and Google. Yeah, they both have 2. Okay. There we go. Any questions about that, gang? Any questions? J&J approved by the FDA for the newest vaccine. Okay, yep, got it. Cool. All right, gang, let's open up our list. Let's go. Let's take a look. FSLY, our favorite, just barely up on the day, kind of hanging out, holding this level just a little bit. I do have shares. I am long shares, I am short calls, and I am long puts, which means I am position trading. I have a collar set up. So the collar right now is worth more than shares. The P&L piece of it is worth more than the shares. I actually ran through all of our list today, and only one thing triggered with Momo, and I added a few things to my list to run over with you guys. We looked at some of these yesterday. Same thing on Pinterest, kind of had some of these moves. And I do also have a collar set up on Pinterest. Today we made a little bit of a lower low, and it did not hold, and it went back higher. So we'll see what happens on Pinterest. Twilio, I got some stuff to show you guys shortly on some of these. And some of you asked me yesterday to share a spreadsheet that I was working on, and I've got it ready. I'll share it here at the end. And for those of you who are interested more in position trading and trying to calculate how to buy levels, and for those of you who use Thinkorswim, I also have a little copy and paste thing I'm going to show you. I'll share my screen with in Thinkorswim, and we will paste some orders. So it'll literally build several orders for you. You paste them in, all the orders go in, boom. So type a 1 in the chat pane if you think that would be helpful. Yes, Jonathan Wage. Yep. Cool. All right, stay tuned. I'll show you that. Coming right up, right after this break. So let's take a look at Twilio. Twilio is setting up what looks like a decent size hammer candle here. For those of you who are interested in getting in, if you wanted to do something like a stop limit buy and a stop market down here, something like this, 396. 12 by 3, actually let's do it like this, 396 by 368, something like that. So I'm drawing my stop market order here because you guys see that it came lower, got bought up, went higher, and then this black candle yesterday had some selling. But today kind of reversed, went a little higher. It did make a little bit of a new low, just a smidge right there, made a little bit of a new low, and then kind of retraced about half that candle yesterday. So that's what we're looking on Twilio. Most of these growth companies have already passed their earnings. I left some of my notes on here. So past earnings. Yep. Okay. So next up is NVIDIA. NVIDIA is one of these that I kind of have a love-hate with. You guys know that it's kind of been going sideways, up and down, makes a high, then a low. It's been going sideways since September. I like NVIDIA long-term. It's just the stock itself, it hasn't really developed a trend. It's kind of just consolidating, going sideways, and it has been for months and months now. So almost like since the retreat that we did in Nashville months ago. So I do like NVIDIA long-term. That's why it's on my list. I don't really see anything setting up right now on this just yet. If you're to look at the long-term moving averages, probably just catching up to it. Yep. So I guess you could buy off the 100 something moving average. One thing I did want to make sure and point out to you guys is whenever you place trades, especially in this kind of environment where it's kind of choppy, is make sure you place trades that follow your strategy. Don't just say, I think it's going higher, therefore I'm going to buy. You have to have reasons why you're doing that. There's a lot of people have kind of got chopped up selling tons of naked puts, which is an advanced strategy. If you don't understand selling put option premium, then maybe either back trade it or ask someone who's familiar with that. We have taught a couple classes on it, but ultimately just make sure your trades match a plan. Thinking it goes higher is not really a good strategy. We can all think something goes higher or lower, or it's going to go higher, it's going to go lower, and it will eventually probably, but you might get chopped up and you might get margin, you might get margin called by your broker. So just be careful selling lots of puts on markets like this, where there's some sell-offs. And this right here is it's just a little bit of a pullback. Obviously my top blue line here is a 10% pullback, but this is why I don't like to sell naked puts at all-time highs, because a lower move and a little bit of a sell-off in the broader markets is going to push most stocks lower anyways. And so just something to keep in mind. I do currently have, I think, one put sale that's open, just a few contracts, nothing crazy. I've literally learned my lesson on some of these where I have hundreds of contracts of open liability. We'll just say maybe 3 times the liabilities relative to my actual trading. Oops. So just be careful when you sell lots of puts. Be mindful of you're opening yourself up to a lot of risk. And we do know a few people who've had some rough week or two just because of some of these sell-offs and pushing things lower. So anyways, just wanted to remind people just to be careful. Only place trades when when they meet your plan, when they're written down. Does that make sense, gang? Okay. Okay, next is BYND, hanging out right here at the 200 simple moving average. This is one that if you are interested, you could start building a pyramid. You could make a pretty good case for probably something like this, actually, where you have a lower level here where you could buy your biggest piece of your position. Let's see what's happening. You could certainly tippy toe and buy a little bit right here at this level. And then a little bit more maybe here and some more here. So imagine buying 10%. So let's say you want to buy $5,000 worth. You're going to buy $500 worth here. So 10% of your 5,000, you're going to buy 20% here, right? You're going to buy 30% here, third D, and you're going to buy 40% here, right? So 10, 20, 30, 40, which collectively adds up to 100%. Very good. Make sense, gang? So in this kind of a market, position trading works well. All of my Momo trades went to cash earlier this week. So I literally don't have any open Momo trades right now where we're trading the 78-minute chart. But position trading has kind of been the winner, the breadwinner so far this year. So we'll see what happens. Next up is AYX making a new low. Be careful buying these. I like it long term. I'm going to replace it. I'm going to tell you guys what I'm replacing this with on my official list. It just hasn't gone anywhere for quite some time. And I believe in the company long term. I think there's some better opportunities out there right now. So I'll come back to that. But AYX, if you want to dip your toe in, be my guest. It is below our 200 simple moving average, which is our long-term support. So be mindful of that if you're jumping in. Next is Shopify. Matt's one of my darlings that in former life. Shopify is going places. They are a leader in their space with e-commerce software. I previously owned a company that competed against them. So I know a little bit more than the average person about Shopify. Buy the dip. We talked about yesterday about buying off these lines. So this is like a 10% pullback. This is a 25% pullback. So even if you don't necessarily sell put options, this indicator will draw a line based on a 10% pullback and a 25% pullback. So you guys, we all know that stocks move on, let's see if I can find one, like something like this on silver, SLV, that it's down 3%. But if you look at it from its highest close, which was over here, from its highest close, it touched that 10% pullback level. So this is different than Fibonacci's, because Fibonacci's, it does take a little bit of math to figure out, I'm sorry, it takes a little bit of a gut intuition, and you do have to figure out where to draw your levels, and that of course adjusts and changes everything. And that is a little bit subjective. But in this case, what it does is it will decide what is the highest close and then take 10% away from that. And that is our light blue line. Does everyone see that? Kind of a light blue line. Okay, the dark green line, 25% pullback. So here's the question, gang. Where would anyone set up pyramids on Shopify? Or do you guys set up a pyramid to buy 3-4 different levels on Shopify? Ross, anybody? Jonathan Wage, right out the gate, the 100 and the 200, also known as the blue and the red line. So imagine setting up a pyramid that looks something like this. So imagine buying a little bit here, a little more here, some more down. Oops, I took the leg off. Some more down here, and then some more here, right? So this is, you're going to buy 10% here, 20% here. Oh my goodness, 20, 30, and 40. So this is probably a great time to find my spreadsheet that I'm going to share with you guys today. I'm going to load it up here and we'll talk about it. Go ahead and click on that link in the chat pane and we'll walk through how this works. So I'm gonna get it opened, and it looks like my first example is TeleDoc, so we'll touch on TeleDoc next. I'm gonna get it open. Few people. Okay. All right, gang. So this is how it works. And let's take a quick peek at TeleDoc, what the chart is. And you remember we talked about straddling this, the 100 and the 200 simple moving average. And on this day right here, which was the 23rd, so on Tuesday, we talked about setting up pyramids, and that was a pretty low point for TeleDoc. You know, for I guess past month, past 30 days. So we set up a buying level here, here, and here. And today, I'm sorry, I got filled on 2 of these. I got filled on these 2 legs yesterday, so I went ahead and deleted the this order. So just because I'd rather get more down here. And I don't normally get filled on 2 legs of a pyramid in a single day. It did bounce off the 200, but we'll see what happens. But I want to show you guys how this works, how this spreadsheet works. So answer any questions ahead of time. So let's assume that I have a, let's just say for easy math that I have a $100,000 portfolio. Okay. And let's say I want to spend 10% on 10 positions. Okay. Oops, 10 positions. So in this case, what I'm going to do is I'm going to take 10% of a portfolio and I'm going to leg in. So over here, I would put $10,000, right? $10,000 is one piece, 1/10 of my total spend. You guys with me? Okay. So if I'm buying 10% of the 10,000, I'm spending $1,000, right? If I'm spending 20%, 30%, 40%, you guys can see how that adds up. That collectively adds up to $1,000. So what I did here is I shaded in this yellow space. Is basically where you would need to fill in the blanks. I always think it's funny when someone shares a spreadsheet, you're like, what part am I supposed to fill in and what part is the calculated? So if we're to go back into our chart, I see I drew at 235 is my first buy level, which got filled yesterday, 226, 216, and 205. Now, don't think too much about the levels. I'll explain why I chose that here in a minute, but just I want to walk you guys through the math, how this works, so that you can build your first pyramid and you can take advantage of a pullback. Now, someone tell me, just looking at this chart, what percentage of a pullback is this stock at right now relative to our previous close? Does anyone know? Zach is saying 25%, 25%. David, yes, that would be correct. It would be negative 25%. It would be a 25% pullback because that's what my dark green line represents, a 25% pullback. And it's based off the highest close. So if you're just tracking the highest close would have been right here, right on this candle right here, right here, the close of that candle. We've never had a higher close. Now this one went higher, but it closed lower, right? So nothing has been closed. There's no white, there's no closes above this level. And so again, it's 25% from the highest close down to this level. Make sense? So at this point, we've had in TeleDoc, we've had a 25% pullback, right? Nice healthy pullback. And we're buying 4 different legs. So inside our spreadsheet, we're buying at 10, 20, 30, and 40%. We're buying a few more shares each time. And so the way this works is we're spending $1,000 and the current price that we're going to buy at is $235. We do the math and we're like, okay, we can afford about 4 shares. So our first buy level, so we call this the number 1 leg, 2, 3, and 4. Our first level, and feel free to make copies of this spreadsheet, gang. But our first level, we're going to buy 4 shares. Does everyone see that? 4 shares at $235. So essentially what we're doing is we're setting up an order. Let's see, setting up an order, and we're going to say buy 4 shares at $235. Oops. Sorry, my hands are cold. Butterfingers over here. There we go. Okay, does everyone follow? Put a 1 in the chat pane if you're still following, if this is making sense. I'm just going to show you how the calculations work, and then I'll show you how to plug this into. Yeah. Okay, 5 people are following. Great. Okay, so the second leg, we're going to buy 20%. Remember, which we're going to spend out of our $10,000 piece, or $10,000 slice of the pie. $10,000, we're going to spend $2,000 or 20% at 226. And so we just do the math. We say we're going to buy 8 shares at 226. Again, so we're going to go back in here. 8 shares at 226. Boom. Right? Makes sense? And same thing here, our 30%. So what we're doing is we're trying to buy more heavier weighted at the lower it goes, right? And so at this point, what I did here was I did the math because we're rounding somewhat. And I said, we're spending $1,000 here, and 4 times 235 is obviously not 1,000. It's actually 940. So this column represents how much money we have like deployed, how much money is being spent. And then as we add our legs, this shows our average cost. So if we're just got our first and second leg deployed, our average cost would be $229. You guys see that? So that's what the average cost is. It does the math on how much we spent and how much per share, and then just does the average of that, the spend divided by the number of shares collectively that we've purchased. So when we get to our third leg, you guys can see our average cost basis actually goes lower as we're going lower. Does that make sense? So let me fill in let's fill in this. Here is our levels, 235. So obviously if only, let's see, let's go back. So if one of our legs, if only this leg gets filled, our average cost is 235 because that's all we have, it's 235, right? Now, if this leg gets filled, because we bought 8 at 226 plus the 4 at 235, our average would be 229. Does that make sense? So our average is actually lower than we originally bought because we're kind of buying heavier. And that's why we kind of represent this with saying a pyramid, because as you go lower, we're buying meatier chunks, right? Jeremy would say tippy toe in, meaning just buy a little and then a little more, a little more, a little more. And then finally your fourth leg is more, a lot more, right? So 40% on the bottom leg. Does that make sense? So as we go lower and we buy the 30%, we buy 30% here. Now our average cost basis across all 3 legs at that point would be 220, 224. That's where our average basis would be. And you guys will notice that that's obviously below our 226. So as we are building the pyramid, our P&L will be red and it'll get a little bit more red, and you kind of need that to happen. So don't freak out. You need that to happen as you're building your pyramid, as the legs are getting filled. So be mindful of where you draw your lines. In this case, I thought, hey, if we get back down to this level again, I'll buy. And then boom, not only did we buy, we got two legs a little too quickly. And so I, in my order, in my broker, I removed this level, and I'm gonna add a lower level. So at this point, we would be, as of this line here, would be filled, and we would be in two legs, like in real time today, right? Boom. Okay. So if I was to go back in and get, if for whatever reason it did touch this lower level, maybe it's going to retest that 200 some moving average and then continue higher, give us a nice bounce, but kind of freak out some of the bulls just a little bit during the day. And so if we get that final leg filled, you'll see that we'll get filled in at 214.80. So that is our average cost basis. And the average cost basis again goes down as we're getting filled more and more. Do you pyramid on daily or off weekly? I typically do daily. That's the chart I spend the most time on. You can certainly do whichever one you want. Obviously, the more conservative way to do this would be as low as possible, right? So I can say I'm going to buy if it gets down to 160. However, it may or may not ever get down there, like ever. So you might be waiting months and months, and it's hitting $300, $400, $500 while you're waiting for 160. So I feel like you just have to, some of this is an art where you draw your lines, but the easy rule of thumb would be to straddle the 100 and 200 simple moving average. Those are both long-term support. You want to buy off support, good spots to kind of tippy toe in. And typically my last line, I typically like to draw it a little bit below my last buying level. I like to draw that a little bit below the 200 simple moving average. Yep. Okay, assuming we're in a world where stocks don't only go up, would you consider bailing after the pyramid is filled? No, I would not, because you need that to be filled. You need the pyramid to be filled, right? Now, if your question is, what happens if you get a candle that looks like this tomorrow and it's all black? Right? If that's your question, obviously you would keep that in mind. But what I would do is buy some put options. Now, pyramid trading and position trading, you're not in and out in 2 days. Just this is a little slower and steadier. And this so far for me has been the most profitable of my strategies so far this year in 2021 so far. And the idea is that you can build up a nice position slowly over time, in this case, a few days, and you're able to lower your cost basis each time. Now, someone tell me, is it okay to add to a loser? Yes or no? Marco says no. Jack says yes. Terry says yes. Albert said if it's part of your plan, you have to. Okay, so do not add to a loser unless it's part of your plan. Now, what most people will do is they'll buy 100% at this top level. Imagine me spending my whole $10,000 right here on this level, and then 2 days later, you guys can see what happened. Is there a way to, Jeremy does, how do you turn off the draw? Is this what? Oh, look at that, boom. Okay, so it turns off my drawing. Okay, so imagine just hypothetically if I'm spending, what? So when I draw, I'll click on, okay, it comes back. Okay. So let me use the zoom annotator. So imagine me spending all $10,000 at my first level. I'm sorry, it was right here. Imagine me spending all of my $10,000 right here at this level. Okay, so all 10K spend, and then we went lower. That is not okay because I'm full in. But what I'm doing, this is different because I'm tippy toeing in. I'm buying some here, I'm buying some here, and I'm buying some at different levels, right? What you don't want is you want to go all in right away and then spend another $10,000 because that is, you're changing your plan, right? And ideally what you want is you want to have the plan where you're slowly tippy toeing in as the market goes lower. And this is great for this exact environment that we're in now, where you're getting some selling pressure. Some sellers are taking profits. And even Kathy Wood is upside down on some of her positions. She's the founder of ARK, or some of the ETFs. Yeah, ARKK. KK. ARK. So even here, you guys, my neighbor actually asked me the other day, it's like, Matt, why don't I just put all my money in here? And I'm like, do you really want to buy at the highs? I don't want to buy at the highs. I don't recommend you buy at the highs. And so you guys can see we're already down. What is that? A good 20%. Let's see, the highest close was here. Yeah, almost 20%. So, yeah, in just what, 2 weeks, something like that. Okay, so does this make sense, gang? I just want to make sure you guys understand how this works. Put a 7 in the chat pane if this is making sense. The spreadsheet. Let me know if you have any questions. Let's talk about it. Let's get some clarity. Can you explain how and where you buy puts for protection? The sheet is great. Thank you. Yep. Sure. So let's look at, get rid of all my crazy lines. So for buying puts, I would only buy puts if I'm fully invested. What you don't want is, you don't want to have puts on the way down, because I guess you could, but you really want it to go lower, right? You want it to go lower so you can get filled in full, like all 4 legs. Now, how often do we get filled on like 1 leg and then it goes higher? It happens frequently. 2 legs goes higher, 3 legs. So you don't always get filled on all 4 legs, but again, we've had some decent, we'll say healthy amount of selling kind of coming in the past couple of weeks. So it's all good. It's nothing to panic. You guys will remember what happened with COVID, and we had like back-to-back weeks of these kind of candles selling off back to back for weeks and weeks. And so that's obviously a different scenario. But to answer your question, where would I buy some protection? I would just look. Obviously, you want to draw some lines below where your last leg is. So if you wanted to draw some lines here and here, those would be some recent lows, right? You can certainly do that. If you wanted to look at, I also like to do this, look at what TDOC they have, FinViz, they draw these automatic lines. So they're showing 180. So that's not a bad spot, right? 180, look, we're right around in there. So that's a good spot to buy. Now, for those of you who are brand new to trading and the whole support and resistance, I remember when Jerremy and I first started working with him as my coach, he would say this obvious support level. I'm like, are we looking at the same chart? Because that's not super obvious. What? Are we talking about the same thing here? And so drawing support and resistance is somewhat subjective. Obviously, it depends on what time frame you're looking at. If we're talking about a daily chart and someone's like obvious support at this level and they're looking at hourly chart, right? We're talking about 2 different things. We're talking about apples and oranges. And so obviously the higher the time frame, the more impactful the support levels. Warren Buffett, as you guys know, does not trade the 5-minute chart. So what you see in a 5-minute chart is not nearly as important what's on the daily and weekly. Now, obviously, if you're a day trader, everything happens kind of in an intraday, shorter time frame, of course, yes. So just something to be mindful of. So to follow up your question, if I had some lines drawn, let's just, for easy math, say 180, and I set this up and I said, okay, if we close below 180, I'm going to buy some put options. And in this case, if I go back to my spreadsheet and I only have 44 shares, then I would just buy 1 contract to protect my position, 1 put option contract. Does that make sense? So on some of these, like let's say we're doing $10,000 spend. Let's say we're going to spend 25,000. Obviously here the collective total would be 114 shares total once we get into all the positions, into all the legs of the position. And so there we would obviously have a full 100 shares. 100 shares is kind of what one option contract represents. So, yep. Boom. Any other questions on my spreadsheet? So would you want to buy put higher or give it room? So again, what strike price you buy your protection at is going to be up to you. I would say that you could buy an in the money put option. So if the price is literally down here at 180, you could go buy a higher strike. You could buy a 290, 300 strike if you want, but you're going to pay a huge premium for that because it's in the money. At that point, it'd be $120 in the money. So it's obviously going to cost you at least $120. It's going to cost you more than what you have here. And so you have to just be mindful of when you hedge, because hedging is kind of like, it's kind of like a speedboat where you're dragging the anchor just a little bit, and dragging the anchor slows the overall performance down just a little, but it kind of stabilizes some of the huge waves that might, like we've seen the past couple of weeks. That's kind of how I think about hedging. Does that kind of give you guys a visual? You can certainly buy whatever level you want. I would buy probably, let's say 30 to 60 days out. So 30 to 60 days. Let's see if we're in the end of February. Yeah, so right here would be, oops, let's go back. 30 to 60 days. So either here or here. Yeah, 30 to 60 days. And slightly out of the money makes sense. So you would get, so that's what I would do. Robert, do you have any thoughts on how you would do? How would you set that up? You're welcome to come on. Are recommended only for options. I'm not sure what you're asking, AH. Are you? So here's another cool thing. I think you might be asked. Are you talking about hedging only with options? Yes, that's kind of what I'm talking about in this case, is buying a protective put down here at this level. Robert is saying I would buy there. I buy there where my stop would be if I was going to get stopped out. Okay, so yeah, there you go. So now here's a question, gang. Why would you have protective put and not an actual stop that sells all the shares and you just take a loss? Why would you not do that? Right. It would be pointless to have the pyramid. So yes, so usually, so I'm kind of teaching half of a strategy right now where you're pyramiding on the way down. For those of you who are comfortable with options, once you're in full and you have a nice move higher, after, let's say, several weeks, you can sell an out of the money covered call, right? So you can sell, shoot, where's my, you can sell an out of the money covered call on an up day to collect cashola. So let's just say that you're able to, on it, let's say the price gets back up here around the 300, 310 level, and you sell a 350 covered call. And let's just say you collect, I don't know, $7. Okay. And let's just say this is an example. I've not looked this exact pricing up. Okay. And so I collect $7. And then what I can do is I can buy a lower strike put, kind of slightly near the money. And so then I can buy protective put on the same up day for $7. That's the ideal. Now, if I sell something for $7, I turn around and buy something else for, I sell it for something for $7 and buy something else for $7, how much out of pocket am I? Zero. Now, it doesn't always work out to be exactly 7 and 7. Sometimes it's 7 and this might be 12, or 9 or something more. So you come out of pocket just a little bit. And so in this position, I'm literally, once I am in full and the price goes higher, I'm literally, the price can go down to 0 and I'm literally protected at the level where I bought my strike, my put, correct? Now, the downside of doing it this way is anything above this strike price where I sold, I'm giving someone else the option to have that. So if any of you guys have ever call option, someone on the other side either sold a naked call or sold a covered call, and you are the buyer, you're on the other side of that trade. So in this case, I'm protected below here, and above here, I'm giving that option to someone else. Because when you sell when you sell option premium, you have no rights, you have liabilities. And as a option buyer, the buyer of the option has all the rights and you have the obligations, right? So that's kind of how that works. So what you would say is you would say that you are short calls. So you think of short and sell kind of interchangeable. You're short the calls, and then you would be down here, you would buy or be long puts. Sorry, gang, I missed some of these questions. Let's see. Got to learn how to buy puts. We do have an options class, intro to options. It's $99. So if you have extra few minutes this weekend, go through this. I believe it's 3 hours, something like that. Yeah, so 2 hours. There you go. Do that before you go to bed tonight. There's a workbook, there's a module, there's a quiz built into that. So yeah, that's great. I can teach like a super basic class. Jerremy does a really good job on teaching how it works. The thing that's really going to teach you how it works once you go through this is actually doing it, like putting it into practice, putting in the orders, doing, accidentally selling puts instead of buying puts. We've all of us who've been around real life trading for a few years have made all of those mistakes before. Has anyone else done that? Accidentally sell a put, or I'm sorry, accidentally, sell a put instead of buy a put. We've all made those mistakes. So, yep. So, okay. Was that helpful, gang? TeleDoc. And man, I gotta lay off drawing all these lines. Okay. Let's see. But you buy them in the last minute. Okay. So how about adding some 250 leaps January 22? Terry asked that. So I guess you could do that. Are you talking about Terry? Are you talking about instead of hedging, you just buy a 250? I think you're talking about a call, right? That wouldn't really help you if things are going lower, though, right? So if you're in all 4 legs, if you're in this, and this leg, and the price is going lower, buying a 250 at some point, hopefully it would turn around, but you don't really know. So yeah. Let's see. You can keep the stock when it bounces. So the idea is to keep the stock for quite a period of time. So let's look at this on a bigger time frame. Let's look at it on a weekly, and let me hide my drawings. Let me hide everything except my indicators. So do you guys agree that this is an uptrend? Now, yes, this week was a little crazy, but this is an uptrend. Now you guys can see that there's little bits and pieces of several weeks where it might be selling, going lower, which is okay. But if you're hedged, that's okay. I have a trade set up on Pinterest on the daily chart where the hedge is actually worth more than the actual shares itself. So my insurance, so to speak, I bought on this day, I sold covered call, bought a put. And so my insurance, especially on this crazy sell-off day, the insurance was worth more than the actual shares itself. So yeah, that's the idea, is you can hold on longer term as the price moves higher, and you can make a little bit of profit as, so think of it like you're holding the shares, and then as it dips higher and lower, you can kind of make a little bit of cash flow off of those moves while you maintain the entire stock. So this strategy is a little bit advanced. I would say intermediate, not advanced. I would say this is an intermediate strategy, but everyone can buy in 3 or 4 different legs. That's fairly basic. Setting up a collar is taught in our hedging with options class, if you guys are interested in that. And that's basically where you just use options, call options and put options, hedging with options here, to kind of use options as like a defense mechanism. So, yep. Let's see. So Morgan says you have to have 100 shares correct for OTMCC. You have to have a minimum of 100 shares. Ideally, increments of 100 would be better. But here's the cool part, gang. I didn't even mention this. But what if, well, I'm thinking about whether I just share this because some of you are going to do this, but let's just pretend, I won't get into the details, but let's pretend instead of buying 4 shares, you buy 1 contract, a leap. Maybe you buy a leap, right? Down here, you buy 2, 3, and 4. So you're legging in, and instead of with shares, you're using call options, okay? Now, at this point, you would have had 1, 2, 3, 4, you'd have 10 contracts that you can then sell your covered calls against and set up collars on up days, right? So when is the best time to sell a covered call, gang? On an up day or a down day? Up day or down day? Jack says up day, Cristobal, Michael, all up days. You guys agree with that? Up day or down day? Up day. Robert, what would you say? Up day or down day? When's the best time to get the most juiciest covered call premium? On an up day, that would be correct. Now, when is the best time to buy a protective put? On an up day or a down day? On an up day. So you could set up both pieces of that, right? You could sell the covered call, you could buy the protective put on this at the same time, on the same up day. So you want to have, it's like buying your insurance. You want to buy it before you need it. Once you need it, you're going to pay multiples of what you could have when you didn't need it, right? So the way I like to think about it is, let's say that I'm up, just for easy math, let's say I'm up, well, let's say I'm up 3R on a trade. Am I willing to spend 1R for protection? Yes. Now, if I'm really red, I really would probably rather bail on it than try to protect it, unless it's setting it up for a position I'm going to hold it longer. So imagine, gang, imagine holding like Apple. Oops, AAPL. Come on. Imagine holding Apple, like buying it way back when. This is split a few times, so, but imagine buying it and holding it through all of this, and on these some of the sell-offs, you're able to cash in an insurance check, so to speak, with your protective put and collect some cash, put it in your account, maybe buy some more shares, and then it continues higher. And so you guys can see there's sometimes it's weeks and weeks and weeks of sell-offs, and that's kind of what this strategy helps prevent. Here you have quite a few weeks in a row just selling. You got a little bit here. This was COVID last year, right? So anyways, just something to think about. If you're interested in learning more about position trading, I'm going to be reteaching that class sometime in March. So I'm going to get more into examples, try to show and explain, show more examples of how it works. So yep, that's that. Let me add one more thing here for this would be 13 shares at 222.24. Okay. Let's see, 224 is my average cost, 216 to 19 at 205. Okay, so Albert says, how do you decide to use shares or leap calls? It's really up to you. For smaller accounts, you really will probably be limited to options versus the actual shares. In this case, we're talking about a $200 stock, right? So obviously, if you're talking about Amazon and you have a small account, you probably won't even be able to trade shares. You'll probably just have to forego trading these bigger, heftier price tag stocks. So, yep. Okay, last piece of this is this magic that happens right here. Has everyone seen that? The TOS order string. So I can literally copy this and I can go into my broker. I believe I'm sharing my tab. Can you guys see my Thinkorswim or no? No, I'm sharing the other tab. Let me try to share this 1 sec. Thinkorswim main. Can you see it now? You should be able to see the, oops, Thinkorswim. Yes. You guys see my Thinkorswim? Is this on? Okay. Okay. So you guys remember in the previous screen, I just did a quick copy and paste of, quick copy. So if you go into here into an order window, watch this, gang. Boom, paste. So in Thinkorswim, there's this confirm and send and delete, and then 2 buttons to the left of delete is paste. Now here's the cool part. This is something you have to make sure you get right in order for this to work. This is a game changer, okay? You cannot be set up on single order. You have to be blast all or some advanced order. And again, what I'm doing is I'm going into that spreadsheet that I shared. I'm blocking the gibberish, like the shorthand notation, so to speak. And I'm just going right here, clicking this button, boom, 4 orders. And it literally, here's what it did is it said, okay, I'm going to buy all 4 legs of this or buy. Here's my quantities filled out exactly. Here's my limit, my buy price to enter. And then if you're using pyramids, then obviously you need to use good till cancel. You don't want that necessarily to be days. You want to keep these open. So imagine being on vacation, having these orders open, and you come back and not only did they all get filled, but you're already profitable, right? That's the idea. You can keep these orders open for some period of time. On certain stocks like Shopify, if you're waiting to buy for some massive pullback, it may or may not ever happen. So just be mindful of that. So tell me if that makes sense. Again, I realize not everyone uses Thinkorswim, but this is super, super helpful. Paste the order from the clipboard. Jonathan says you can paste it to your trade log too and get a copy paste function from your swing trades with stop loss and take profits. Okay, yeah. Was that helpful, gang? Literally just this button right here. Boom. Now, I got tired of trying to do all 4 legs one at a time, buy 4 at this price, buy 8 more here, and I'm like, there's got to be an easier way. And then I remembered someone from Thinkorswim told me you can like copy and paste orders. I'm like, what? So yeah, yep. So Cristobal, it does work with options. Obviously, the option is not going to be a 4-letter, 5-letter code. It's going to have the expiration and the strike and all that. It's going to be a much longer code. Let's take a look. Let's see. Oops. Let's take a look at something like. Let me see if I can do this the same here. Let me see if I can copy this code, stick it in over here, and see if I can make this work. So I would do buy +1 Pinterest at, let's say 1815 LNT GTC. Okay, let's see if that works. I don't know. I believe it would, like in theory it would. Okay, you ready? Ready? Boom! No, that did not work. It's showing stock. Maybe it's because I need the PENN, PINS, the period in front. Let me try that again. Let me copy. Good question though. I'm sure there's a way to do this. Oh, plus I have a typo in it. That would help fix that. Let's see, delete, paste. Not traded. Why is it not traded? Jonathan is saying there's a space or underscore between the underlying symbol and the contract details. Oh. Well, so you can't just copy the, okay, let's see. Okay, well, I'll play with that this weekend and see if I can get a better option. But Terry, I believe it can be done. Apparently, we have not yet figured out how exactly that's done. Yeah, and so it's super helpful when you're setting up your pyramids, right? Super helpful. Okay. There we go. Let's share my screen again. All right, and let's get through the rest of our lists, and let's all have a good weekend. Anyone do anything fun this weekend? My fun this weekend is going to consist of running half marathon in the rain. I don't see anybody putting that in their fun column in the chat pane for some reason. Why is that? Snowshoeing tomorrow. Nice. Nice. Idaho got lots of snow. Oh. Okay, let's roll through this. Mongo, kind of just hanging out, resting. I do think that some of these might pull back just a little bit more before continuing higher. Right here at our 10% level. Elastic, you guys can see I have pyramids already set up. Hint, hint. I got my first leg filled yesterday. Peloton. Peloton also hanging out right in between these simple moving averages. Good place to start the top of your pyramid if you're interested. Trying to get something set up, maybe something like this. Tesla, pulling back to probably the 100. Again, good spot to set up a pyramid, straddle these two lines. Roku, I've not got back into Roku. It's not yet pulled. It's pulled back, but not enough just yet. You can see where I'm straddling these lines. And if we go sideways for a while, I might just lower this a little bit and see if we can be a little bit more patient on Roku. CrowdStrike. These all look very similar, don't they, gang? Just kind of hanging out in between or right above our moving averages. Datadog. If you are not in, you have the opportunity to buy right here. Start your pyramid a little lower than if you started up here. Apps is a new one that is on my list that I'm looking at, and then one that I really am super excited about that I was looking at that's going to replace is this one you guys may have heard of, Square. That is going to replace AYX on my list. Square. So I don't know if I got filled. The low of this was 217.40. So 40 cents away. What? 40 cents. You see that? 217, 217.40. So got open orders on this. We'll see if we can get some more 40 cents more of a pullback. Next is Cloudera. Same thing. This looks like a little bit of a high wave indecision. Look for a continuation higher if it breaks above. So for those of you who aren't familiar with trading something like this, an indecision candle would be you want to set up a stop limit order to buy only if the price goes, I'm sorry, that's sell. Only if the price goes higher do you want to get in, and then you want to put your stop somewhere below a recent low, which would be right there, something like that. And that gives us, obviously you can put the stop right here and you're just waiting for the market to punch you in the face, barely kick you out and then continue higher. So we're going to give a little bit more room, a little bit more wiggle space to pull down a little bit more and then go from there. Terry's harvesting fresh oysters. Good luck. Good luck with that. I've never done that. Do you pyramid and do mom's trades both, or do you in conjunction with the other? So I actually use 3 or 4 different strategies. I do combine them at times. Yes. Momo, all my Momo trades just went back to cash, and they've been, Jonathan can verify, on my list has been in cash for 3 days, 4 days, something like that. Yep. So when things are pulling back a lot and I'm long only, then I'm going to be waiting for pyramid. I'm setting up pyramids. I'm going to be doing other things. So yep. Next is TLT. Man, kind of made it low. So I don't know if anyone likes this, but this does not look bullish to me. Today put in a little bit of a pop. I don't know. It still looks like when you're moving averages across like that, it just doesn't look like a long-term investment. Obviously, I'm going to day trade that. That'd be my guess. But the cool part about this was this. If you were going to day trade it, was we closed here and we gapped up. So a black candle gapping up is what kind of gap, gang? They bullish, gap and go, G and G, bullish gap and go, right? So I don't know what to tell you about this unless you look on a weaker week. Yeah, I'm not sure. I don't know what to do with this one. I mean, there's a lot going on with this, and I don't know if this would be a long-term investment or not. I guess you're betting against or for higher interest rates. I'm not quite sure what the bond ETF does here, but next is SLV. So kind of hanging out, just barely kissed our 10% pullback level. So yeah, if you want to set up a pyramid on something like this doesn't look like it's going anywhere. And the reason I say that is because we're just sideways. Ideally, what you want is these stair step up, right? So you want these stairs saying we're going higher, we're making new highs, we're making new highs. This one is basically saying since August, no new highs, no, and again, it's based off the close. So this right here is our highest close. This gapped up and then sold off, so it didn't even hold, and then it gapped down. So it looked like it tried to go higher and then kind of got punched in the face. So that's SLV. Let's do a quick run through of Momo. All of these are showing me on when I ran through this earlier. They're all bearish except for one. Ready? QQQ, bearish, bearish. We're waiting for a bullish signal. So I like all the selling. Lots of some of these that the selling when it comes in. Like once this selling ends, I mean, we're gonna have some amazing opportunities to get in when these moving averages crisscross, which might happen Monday or Tuesday on some of these, gang. You can see we're kind of just going sideways a little bit. So when that happens, Momo is going to be in full effect, and it's going to be cranking out some dollars. It's going to be Momo is my ATM. So again, bearish. Nvidia bearish on Momo. Again, Momo is our 78-minute chart, and it tells us when to get in and when to get out. And right now I am just long only. So when I see exit long, enter short, I close my long position if I had one, and I wait for another signal. This right here was a magical, look at that drive higher on Nvidia. My trading automation made some gainage with that. So Beyond Meat, same thing. AYX, Shopify. Ooh, look at AYX. Ooh, look at that. Does that look like any Colorado slopes? Zach, does that look like some black diamonds? Just lower, and lower. Steep angle. Shopify. Teladoc, get some snowboard action on that. Again, Teladoc, I'm bullish on these companies long term. It just happens to be in a very short timed bear downtrend. Mongo, Elastic, Peloton, all these. You guys seeing a pattern here? All just slightly bearish, which means Momo, if you're long only, is going to be in cash. All of these. Now you might have your own watch list. Now check this out, gang. One triggered today. Look at that. One triggered today. And that's apps. This is a new one on my list. Apps triggered today. Buy at the close is down just a smidge. We'll follow that over the next week, see what kind of gainage we can get out of that. Net, Square, Cloudera, TLT, and this one about to crisscross, not quite an SLB. So yeah, that's what I have for you guys for today. Hit me up with what you would like to see on Monday. I believe Jeremy will be back in the saddle. Let's see. Let's take a look at the schedule. For those of you who aren't familiar, you go to live trading on our website. Down here is the schedule of events. So Newsome in the afternoon room. So Jeremy will be back in the saddle on Monday. Also, real quick, has anyone, has everyone gone through our mentoring programs with the group coaches? So if you're brand new and you're interested in learning more in like a small study group, mentoring is for you. And today I have 2 that I'm going to give away, 2 slots I'm going to give away. Now, some people already left. They're like, oh, Matt's ending. Time to bail. Time to hit the slopes. So I would reach out to me if you're interested in a scholarship for, we have one for Thomas Wong and we have one for Tracy. So reach out if you're interested. Let's have a conversation. Let's see if mentoring's for you. Maybe one-on-one personal coaching is for you. With Robert or Tony or myself or anybody else. So hit me with your stocks. Zach, yep. Hit me in DM if you're interested in a scholarship. Okay, hit me with the stocks. What would you, yep, guys, send me a DM in Slack. Go ahead and hit me with your stocks that you want to watch. You want Jeremy to review on Monday, Merchant Monday. ICLK. Apps, yes. IBM or IRM, Stephen? In Neo, FireEye, SDC, Nova, IRM. Okay, got it. Nova, Iron Mountain. Yep, got it. I thought that when I first saw it was IBM. Okay, what else, gang? Anything else? DocuSign, yeah. Merchant Monday would not be complete without Shopify and Amazon, right? Jumio, yep, cool. XOM, Pinterest, yeah. FCEL. What else? Upwork, Etsy, DraftKings, BLM. What? Is that a real ticker? Okay. BKM. Okay. Derek Washington. Welcome back, man. Okay, cool. Anything else? All right, gang. Thank you so much for your time. Don't forget to love life, live life, and trade it. Thank you and good night.